Here.
Hey everyone, welcome to another episode of Punch Card Investing. We are short one member, our very own Karan Ganani, and he and I got into a beef over this last week. So I was really disappointed that he wasn't going to be coming to this episode because we had a little back and forth on this great platform that is YouTube. I made a video talking about his tweet about how REITs are so superior to direct real estate investing. And as a real estate investor myself, I do own some REITs, of course, so I do have a soft spot for them too. But as a real estate investor myself, I took exception to that and decided to make a reaction video going over the benefits of direct real estate investing. Karan then made a reaction video there just to get this infinite monetization loop going. And now he's nowhere to be found. So I don't know what's going on, but we'll see if he comes back. We might be down Karan forever. I might have gotten to him a little bit too much, gone a little too hard into my reaction. I don't know. So we'll see if he comes back. Anyways, with that said, I don't know if you guys have heard anything from Karan, or is he out for good?
Yeah, he's gone undercover, I think.
Okay.
If you can't handle the fire, get out of the kitchen.
It must be. Yeah. But anyways, with that said, maybe we'll see him again, maybe not. And for those of you who aren't picking up on the sarcasm, he will be back. Don't worry, we're still good buddies. But for today's topic, well, we wanted to do a bit of a change up, I suppose, talking about emerging market stocks. We've talked a lot about China, which is considered emerging, which is a lot of emerging stocks, as you've probably come across, tend to be Chinese stocks. But we wanted to go beyond China in looking for different emerging stock market ideas. And we'll go over some picks that we've looked into or that we've heard about. But I kind of wanted to kick it off with a little bit something different, since I myself haven't really done much due diligence outside of the US. It's been very US centric, my analyses, partly because I've been spending a lot of time looking at real estate deals. So when I look at stocks, there's only so many I look at. And so far it's been mostly in the US, but I do have a lot of exposure in my 401k to emerging market funds. I intentionally had my 401k skewed more towards that. And one of the funds I actually have is this one right here, which is the Fidelity Emerging Markets Index Fund. And I wanted to see what some of the main holdings were, because I assumed it was going to be pretty heavily skewed towards China. Even though it has 1,400 holdings, the top 10 holdings make up about a third of the portfolio, or a little bit over a quarter. And as you can see, these top 10 are pretty much all China, except for a couple. Naspers technically isn't China, but it basically is because it has a bunch of Tencent in it. Vale, I believe, is Brazilian, or it's South American at least. So there's an exception there. I'm not sure where Reliance is, but pretty much everything else is China. The largest holding being Taiwan Semiconductor at 6% of this broadly diversified fund, you would think. But as you can see, the really point I'm trying to make here is that a lot of emerging market funds don't really give you a ton of exposure beyond some of the larger emerging markets like China. So when you're digging for opportunities, my initial thinking was, I could just buy an emerging market fund, and then that'll give you a kind of broad basket of different opportunities. But as you can see, it skews very heavily in many cases towards China. And if that's not something you want, then you might have to do a bit more digging. It's not necessarily as easy as just a fire and forget fund like an emerging market fund. Again, in many cases, they're not all like this, but many of them are. So I thought I'd kind of use that as our sort of primer, and wanted to see if you guys had any different ideas outside of China, seeing as though index funds might not necessarily be the best way to go if you're really looking for that outsized return in a different market that isn't named China or the US. So what do you guys got? Who wants to start with a nice idea?
I can start off if you want.
No one.
Yeah, no one.
I'll kick it off if you want. So the company I'm looking at is called Automatic Bank Services. It's a small company in Israel. So in US dollars, I think it's about $250 million. I might be slightly off there. I'd have to check that. But of course, being in Israel, it is certainly an emerging market. But usually compared to other US companies, the multiples aren't too different. So if you compare two banks, for example, the Bank of Israel and a bank in the US, if you're looking at price to book, they're pretty similar, maybe about a 25% difference. So just because it's in an emerging market, the multiples aren't too much different. But part of the reason you're looking in these markets anyway is you're looking for cheaper companies. We know the US is pretty expensive. Most developed markets are pretty expensive at the moment. So if you're purely looking at a quantitative type approach, it's probably better to go towards emerging markets. Maybe there's certain ETFs or funds, like you mentioned, Jack, that are better than others, and they probably offer better returns than the S&P 500, just statistically. Not to say that will definitely happen, but I guess, the data would make that argument. Someone like Meb Faber, who was on Bill Brewster's podcast, would make that argument at least anyway. He's a real big quant guy. But anyway, the company is Automatic Bank Services. It's essentially a payments company like a MasterCard or Visa of Israel. And MasterCard and Visa actually don't operate in Israel. They decided to stay out of that market for a range of different reasons, but they actually own 10% of this company. They each own a 10% stake each. So that's probably the first thing, is they pretty much have a monopoly and they don't have to compete with MasterCard and Visa like every other payments transaction company around the world has to do.
Are they looking to expand outside of Israel more heavily?
Certainly not now, and I don't think they would in the future either. It was originally created by the banks in Israel, 4 different banks. They're still 10% shareholders in the company. So I don't think they're looking to go outside of Israel, but the appeal is still there regardless of expansion outside of Israel, just because they're still very early stages and there's a lot of different ways for them to grow.
What are some of those ways? I'd be curious if they've already, I don't want to say they're a one-trick pony, but there's obviously a ceiling if you're sticking to just Israel on the amount of market share you could potentially grab. What are their sort of plans from what you've seen?
Well, regardless of they've got organic growth that will come anyway, just as any business does. But the main growth, the additional upside, comes from the fact that Israel's a very cash-heavy country at the moment. They pretty much have 50-50 of cash payments versus cashless payments, which is a huge difference compared to the US, which, depending where you look, the data is very different, but around 80% of the US is cashless payments. So just as Israel start to spend more on cards or mobile payments, the company's going to grow exceptionally just from that alone. Sure. The other difference is that the transaction fee is about 1/5 of MasterCard or Visa. So there's no reason that in the future they won't slowly push that up. They haven't in the past. Over the past 7 years or so, they've kind of been heavily run by these banks, and the banks really didn't want to lift that, but they're kind of stepping away from that now with a new CEO and everything else. So it's assumed that they can slowly raise this in the future. So they're probably the 2 main ways that the company grows.
So would you say it's more of like the pie getting bigger sort of play, as opposed to them taking a larger share of the pie? Or it's obviously a little bit of both, but more the former rather than the latter?
Yeah. Well, essentially, if those cashless payments catch up to the US and other developed markets, that's like a 75% growth or more just in their market.
In the market
size, I guess.
basically.
Yeah.
Yeah.
So that's a lot of growth that can come, whether it's quick or not. I would assume it probably happens pretty quickly. They seem to be trending towards a lot of mobile payments, which Automatic Bank Services, the company, still benefits from, just like Visa and MasterCard do as well. But yeah, I'd say that's where a lot of the growth will come from quickly. The transaction fees a little bit less certain, as there is some like regulatory risks and things around that. We don't know how fast they can push that price or whether or not it will happen quickly or not. But yeah, that's pretty much it. I guess for valuation wise, this is another way the return comes, I guess. They traded about 20 times EBIT. Something like a MasterCard and Visa trade closer to 40 times EBIT. Other smaller payments companies trade closer to 30. So I don't think they're going to go towards 40 times EBIT like a MasterCard or Visa, but probably 30 is more fair, which is just another 50% upside. So between just a multiple re-rate, organic growth, the growth of the cashless payments and increasing transaction fees, there's a lot of growth that can come quickly or slowly. I don't think it really matters, but the returns could be pretty high.
Someone just asked, given your recent new position in Hingham, are you worried if you were to buy into what's the name? Automatic bank services. If you were to buy into this too, he's kind of asking, like, do you consider sector overweighting versus underweighting at all, since this is technically in that finance sector, even if it's kind of more secluded to Israel versus a broader financial market?
No, I certainly wouldn't be hesitant, and I don't think they're similar businesses at all. I'd probably even be willing to buy another bank if I can understand another bank like I do Hingham's, but I'm not too concerned. If it was like 30 or 40% of the portfolio, maybe then I would consider it, but I have like 7% in one bank and no other payments or financial companies in there, so
sure.
I'm not concerned yet. How about you guys? Have you looked into Israel at all for this stock or any others?
Not to this point.
I've watched your videos on this topic. That's about the extent of my research so far.
I think what's interesting about when you were talking kind of about that, the cashless payment market growing within the country of Israel, or the market of Israel, it's kind of like I think with a lot of emerging stocks, I think there tends to be more of like a macro focus, because it depends on like the economic growth of the country in many cases, not always, or just like you'll have this sort of gap in a particular industry that might be filled out in a more developed country, whereas you go to an emerging market, that gap is completely open, and it can be filled, and it's not necessarily like a new innovation or anything like that. It's just more simple economic growth that gets them there. So it almost feels like more of a kind of a macro focus. And I know we were kind of talking about that with like China and Alipay, for example, as China continues to grow, you'd expect stuff like that to grow a lot too alongside of it. Whether or not the business really does much else to improve, you would just expect kind of more natural growth from the actual economic growth, almost like an externality of that growth, rather than the actual business doing something super savvy in the meantime, which I think is that how you guys view emerging markets at all, or that certainly got my wheels spinning when I was hearing you explain it that way, Frank.
Yeah, I guess with emerging markets, like this comes in China as well. At first, you want to look at the actual business. That's most important, no matter what market you're invested in. But there usually is some type of either additional upside or downside. It could be a tailwind rather than a headwind. Like, we don't really know what's going to happen depending on the market, but there's definitely more of those involved, whether it's regulatory risk, it's going to slow down the company, or whether it's a real fast GDP growth or something like that that's going to speed it up. So it's just something you have to consider more when you're looking in emerging markets rather than the US, where you can pretty much ignore those factors, I guess.
Fair enough. Tom, Brad, comments, or shall we move on?
Yeah, I have nothing to add.
That is an interesting one, though. It's like, it's simple enough to understand. I'm sure there's plenty of complexities with anything in finance, but like the general business model seems to make a lot of sense. So that's an interesting one for sure.
The fact that it just has the competitive advantage, like when you think of the moat, the best moats of all time, Visa and MasterCard are pretty much the best explanation of that. So
it's like
I think they have that. Yeah, I think they have that in a country, given that it is small and there is risk involved. It's great that they have a competitive advantage, and essentially, well, they are a monopoly, and they're owned by Visa and MasterCard fairly significantly. So they have that extra, I guess, knowledge within the company to help them grow moving forward.
Did you say what percentage Visa and MasterCard own?
They both own 10%. So there's 4 banks that own 10%, and then Master and Visa cards. So that's 60% that's kind of owned by these other companies. And given that it's small as well, it's a very, very illiquid company, which is part of the reason, in my opinion, that the multiples are lower than anywhere else in the world, not just because it's in Israel. Of course, that's part of it as well. But as it grows and it becomes a little bit more liquid, I think some institutional investors might start to access this as well.
I wonder what those banks' price targets are if they have one. What would cause them to sell? Because that's a large chunk. That's the majority of the business is essentially off market, which is, yeah. I think to your point, that would definitely help a lot long term for multiple expansion. One would think. Interesting.
So do
Tom,
you
Brad,
have
have
a
it now.
position yet, Frank, or not?
No, I don't have a position yet, and I don't know if I can actually understand the regulatory risk yet. Like, one of the big problems with this company is their filings come out in, is it Hebrew? Am I off there?
Yeah.
Yeah, Hebrew. So the translation is hard to get. They kind of come out in English 3 to 6 months later, which is a huge problem. I've got a person on Twitter that has sent me some translated ones before, but to rely on that would be pretty rough. And then just the fact that I don't understand their economic system at all. And I'd have to research that a lot before I got to the point where I actually wanted to buy. I just think it's appealing at the moment.
I know we have some Israeli viewers, so if you guys could shed some light, we'd appreciate that. Hop on in the Discord too. That would be a great place for that. That is linked below. So check that out if you're not.
You might have to start taking some Hebrew language classes or something to get around this one.
Well, I've had 3 people from Israel on Twitter. Like, I put out a few posts about it, and they've reached out. 2 people were kind of pushed how risky the investment was, and 1 thought it was a great idea. So if that gives you any perception, I guess, even from people within Israel, they think there's a lot of risk involved. So
2 of 3, big
2 of
survey. But it's on investing Twitter, so you'd think more savvy than the average person.
You would hope.
Yeah. Great. Anything more there on automatic bank services?
That's about all I got. SHVA is the ticker if anyone wants to check it out.
I like it.
Next.
All right, who's next?
Do it, Tom.
I'll go. All right. So I've got a couple of different ideas I want to talk about. I'll say up front that I haven't gone super deep on either of these, but I think they're kind of interesting case studies at least. I guess the way I've kind of approached this topic of emerging markets is it's not the way I typically sort of search for investments, is to say, I want like 10% of the portfolio in China and 20% in somewhere else. And that's too kind of top down for me. I'm more like, can I get my head around this individual company and kind of go from there? And then obviously the broader economic situation in a particular country can kind of play into that analysis a little bit as well. But I think one of the interesting kind of mental models, I suppose you'd call it, from people like Guy Spear and Monish Pabrai, is to look at more developed parts of the world. So look at places like the US. And I think you said this before, Jack, but basically kind of look at businesses that have done well in, more developed countries, and then see basically, is there like an equivalent in other countries? So the couple I'm going to talk about are actually both Guy Spear investments, previous investments, and I think one is one that he's still holding. And I think it's just kind of an interesting case study of how these things can kind of play out. So, super chat.
Hey, Tim.
We interrupt your regularly scheduled programming for a super chat from Tim here. Just to thank you. Thank you for all the great content and all your channels. It provides tons of value. Yeah. Oh yeah, I forgot. We have our own channels too that provide value too. Free of charge, of course. But we always appreciate the super chats. Thanks, Tim.
Thanks, Tim.
Absolutely. All right, I will carry on.
Continue.
So I'll get the first one out of the way quickly. So the first one is a stock called IEX, or Indian Energy Exchange, over in India, obviously. So this is a current holding of Guy Spear. I'm not sure if you want to pull up his sort of super investor holdings and ticker, but it's not going to show up in a 13F because it's an international holding, but he does have some sort of filing that flows through the ticker. I think it's about a 10% position for Guy Spear last time I checked.
What's his fund again? I always forget.
Aquamarine.
Yeah, that's right.
So yeah, and this is actually a position that's done really well. I think in the last year or so, it's up about 300%, something like that. So it has run up a lot. Basically, this is a an exchange kind of business, almost like a stock exchange kind of thing, but focused around buying and selling power. So if power companies are wanting to secure kind of power supply for wherever they need to kind of direct that, Indian Energy Exchange is kind of where they go. Yeah, that's the one. So yeah, it's a really interesting business. I mean, some of the case studies or some of the write-ups I've read, rather, the thesis is fairly straightforward. So India is experiencing fairly quick GDP growth. We were just looking briefly before we went live on this, and it looks like it's bounced around in the sort of 6 to 8% per year range, maybe 7 or 8% a year GDP growth at the moment. And from the write-ups I've seen, sort of demand for power seems to grow at about roughly 1.5 times the rate of GDP growth. So, from that you land on sort of, 10 to 12% sort of growth numbers with fairly long tailwinds. I don't see demand for power in India kind of slowing down, or the growth of that kind of slowing down anytime soon. So that's the first one. That the prices run up a lot. Just looking at some initial valuation metrics will kind of make your eyes water a little bit. So I don't think it's something I'd be interested in buying right now. But with a lot of the stuff, I think it's interesting to add these kind of.
It's almost doubled in the last 3 months. Does that have anything to do with? I know there's a lot of like coal, like shortage problems and other energy sort of bottlenecks right now. Is it mostly having to do with that, like commodity prices, or is it just pure business growth?
I wouldn't think it was to do with commodity prices. My understanding is that most of the revenue for IEX comes from. Actually, we've got a comment saying yes, coal shortage, so potentially. But my understanding was most of the revenue comes from basically people making transactions to buy and sell power, and they're kind of clipping the ticket as that's happening, kind of in these exchanges or in that marketplace.
I'd imagine something there, like the actual energy price itself, would probably be factored into that. They get a bigger cut on the exchange or something like that.
Yeah, that's fair.
Yeah. But yeah, that's a double in a quarter is pretty incredible. Not even looking at all time.
Mm-hmm. Yeah, so that's one kind of for the watch list, I suppose. It's a business I'm still sort of trying to wrap my head around at the moment, but certainly one with kind of a long runway for growth. And I see we've got a couple of comments that Pabrai is potentially in that one as well, but
he's potentially in everything. Everything that's not in the US, he's potentially in it.
Well, yeah, I would have thought if he owns it, it would be showing up on ticker, but I don't know if I've seen that under Pabrai for ticker. Anyhow, so that might be one worth noting as well. And I did have a second one. So the second one is kind of a similar approach. So kind of looking for an American business that's done really well, and then can we try find an equivalent in one of these emerging markets? So that one is a business called Crystal, and this is also listed in India. So Crystal is kind of an equivalent of like a Moody's or S&P in the US. So it's a credit rating agency. And again, as kind of capital markets expand in India, it's kind of got a long runway for growth again. So interestingly, this is actually a business that Guy Spear did very well on, but could have done a whole lot better on. So just to walk you through the numbers with that, if you want to, I'm not sure if that'll go back far enough, Jack, but can we get a stock chart that goes back to like 2000?
It doesn't quite go back that far.
I think we looked at this on Google or something.
I think if you get on Google, it'll go that far back. Crystal stock chart. There we go. So I'll give you a couple of prices at which Guy Spear bought in at. So he bought in late 2001. This is all split adjusted at about 12 Indian rupees per share.
So yeah, around there.
He then continued to buy. So he bought more in 2004, late 2004 at about 55 Indian rupees. So
already doing well.
He's already got about a 5x, and he's continued to buy. And it's a little bit kind of more of a gray area around when exactly he sold. I'm just kind of pulling things he said in previous interviews and stuff. But from what I can gather, it's probably 2006, 2007, just before the financial crisis, which I think the price got in the sort of 300 to 350 rupee per share range.
Yeah.
So he's ridden it from 12 and 55 to kind of 350. But
Well, it's a nice
if you
like
can-
16x or so. We'll call it that.
yeah, but if
it
he'd
could have been.
yeah, it could have been. I think the maths on that first purchase is a 250 bagger.
Yeah, just
to kind of
about.
current prices, and on the second purchase, it's like a 50 bagger or something. So, pretty crazy home run. I've heard Guy Spear say in a couple of different interviews that, one of the dumbest things he ever did was woke up one day and decided he'd made enough money in Crystal and sold it. So,
What are you gonna
yeah,
do?
it was a big win for him, but
I wonder if he'll be able to put food on the table.
Yeah, I think he's doing all right.
Has he said anything more than that on why he sold it? He just decided, well, I've done well enough on this one.
Yeah, I don't know, because the timing, from what I can gather, is he sold this pre-financial crisis, and then he was also a shareholder in Moody's around that time, and he held Moody's and then sold it actually post-financial crisis, which is another one of the dumb mistakes he said he's made as well. So I don't know why he was looking at those two businesses differently, to be honest. Maybe he just had something else he wanted to buy and he needed the cash. I'm not too sure.
Could be.
Yeah. But again, it's like it's an interesting one for the watch list. I was looking briefly at valuation, kind of hoping that, maybe there is a little like India discount, for lack of a better phrase. But it's actually more expensive compared to like a Moody's and S&P. And to me, those are getting up there as well. So yeah, again, it's probably not something I'd buy right now, but an interesting one to follow.
Yeah, I'd have a hard time blaming anyone for selling Moody's back in the financial crisis, but
Yeah, really.
Yeah, I mean, if you sort of look at that today, it's like, if they can survive the financial crisis, they can probably survive anything. I think that's why people are willing to pay up for them at this point.
right.
I don't know if you want to pull up a Moody's or S&P stock chart, Jack, but those things are insane. They've done really, really well. And we've got a few comments in there on this from Crystal, but S&P, I don't know the exact percentage, but they're quite a large shareholder in Crystal as well. So it's not like S&P are going to come into the market and try and compete with Crystal either.
Yeah,
I just compared some of the multiples as well, Tom, which actually surprised me. I thought you would get some type of discount or at least be similar.
No.
But then I went to compare the Indian market's PE ratio to the US, and it's actually quite similar there. So I think it was about 33. So NASDAQ trades at around 40. I think S&P 500 is around 35 or so off the top of my head.
Yeah.
But for an emerging market, it actually isn't a cheap market, which is surprising.
I wonder if that's just because maybe not as many companies are public, like on a per capita basis or something like that. Whereas maybe you have a lot more smaller, more speculative, I suppose, companies that have gone public in the US comparatively, maybe.
Well, I think, if you think of India like an individual company, almost like you're paying up for growth. So I think
that's true.
I guess looking at it rationally, that kind of makes sense. But you would think that in emerging markets you'd get a little discount, but it doesn't seem to be the case.
Well, you're paying for growth. It's growth and value, or growth and price. It's like different sides of the same coin. Whereas like with the US, you're buying more safety. So like the multiple could be higher there as well, depending on what's going on with where the money's going. So.
Perceived
safety. Perceived safety. Yes, perceived safety.
For some context, some of the other cheaper markets, so Spain and Russia are around 10 times PE, which is super cheap, obviously. Surprisingly, the UK is at 15. There's a few different places where you can source this data. Even a quick Google search will show you, but that surprised me that the UK is actually so cheap. And China's around 16 as well, so... I guess China and Russia are often talked about as the emerging markets, and just on having that broader look, those markets are the cheaper of the emerging markets.
Do you know where New Zealand and Australia sit in those, out of interest? I've never seen that type of data.
Australia's high. One of the ones I just seen said Australia was at 45.
Wow.
But that seems pretty high for me, but I'm not sure of
Could
the
be
exact numbers.
Yeah, I mean, you've got Afterpay's now been acquired, hasn't it? But there's some pretty high flyers that people are paying up for in Australia.
And that'll
Yeah.
skew the data that much more because there's just so many fewer companies. If you have like one outrageous one, it's going to probably pull a lot more.
Nespers.
Yeah, yeah, right.
Jack, can you pull up that link I sent in
Oh,
the private
sure.
chat, the Talas Capital link? So this kind of speaks to what you guys are talking about. Also, early on in the comments, Lovelesh, I don't know if he's still here, but he asked a question about Pabrai. You know, I guess there's word on the street, Pabrai is buying 3 new positions in Turkey that haven't been disclosed. Can you scroll down a little bit on this, Jack?
Mm-hmm.
So you see on the right side there, emerging market countries, 2021 forward PE. I thought this was an interesting emerging market, you know, just to get a sense of where the deep value is. You look at Turkey, it's like, what is that, 5.5 or something. But this Talas Capital was formed between Matt Peterson and this guy in Turkey, Mesut İlyal Tioglu, who's supposedly, you know, one of the best analysts in Turkey.
Can we get a pronunciation on that name again, Brad?
No, we cannot. Absolutely not.
But
Say that
Brad,
10
you were in
times
Turkey.
I butchered it enough
months.
the first time, guys. Come on.
Brad, didn't you learn Turkish? Like you
I
were
should
you were
have.
in Turkey
I
for
should have.
months.
I
Like
wasn't
when you're doing
paying
your
attention.
racist due diligence. Like
So where was I? So this guy Mesut. I'll try his first name.
Isn't Brad in a warehouse right now? Sorry, Brad.
He put out a talk on Manual of Ideas just 6 months ago. And there's 2 companies he's really bullish on, and I'll just give one, SISE, out of Turkey. It's like a glass manufacturer or something. So could be something. I don't know. You know, I know Matt Peterson and Pabrai are linked. We also know Matt Peterson and this guy Mesut are linked. I don't know if Mesut and Pabrai are directly linked, but SISE could be an interesting one to look at. Anything else there, guys, before I jump into my sort of emerging markets piece?
Yeah, Turkey's really interesting. Like it does seem kind of that the market's bombed out. I guess we've got a comment already about currency issues and stuff, which probably warrants a bit of discussion. But that's why I really like the racist idea. I haven't bought into it, but my understanding is they actually get paid from a lot of their tenants in euros these days, and they've kind of worked around some currency issues that way. Plus, you got real estate, which is, I guess, not immune to those things, but it helps over other industries as well.
Yeah, just real assets. So, and ideally not having like contracted prices that eliminate your pricing power or something like that.
Mm-hmm.
Yeah. Cool. So, you know, when the idea was thrown out for this week, emerging markets company, my first thought was, well, where would I look to find a new idea in the emerging market space? And I thought of Funsmith, because Funsmith has an emerging equities trust, which I found out not too long ago. And, you know, I've talked about Smithson a little bit as well, which is like their small and mid cap fund under the Funsmith umbrella. And the Emerging Markets Trust puts out an annual meeting every year, which I highly recommend. It was really good in 2021. Talking, you know, if you're interested in emerging markets, it's a pretty good crash course on what to look for, what to be careful about. It's like 45 minutes long. But poking around in there, one of the ones that jumped out at me, Jack, actually, can you click on the other link that I sent to you?
Pull that up.
Go down to page 16. So this is a list. It's hard to see. Can you zoom in a little bit?
Yes, sir.
So this is as of the end of the second quarter, what's held in the Funsmith Emerging Equities Trust. So, you know, you see a lot of India, and, he actually talked about this quite a bit, why they have a much bigger exposure to India than they do to China. There's, they like the tailwinds more, there's regulatory, just the whole picture in India is more compelling, at least according to the framework that Funsmith uses to identify investment opportunities. But you see number 5 here, Vitasoy. So that, is so much smaller than the 4 above it. It's a $2.5 billion market cap company. In the annual meeting, they actually highlighted this one as kind of meeting their ESG, ambitions for sustainable manufacturing, right? This company sells plant-based food and beverages, which, I think has a huge tailwind behind it. I mean, we're seeing a lot of these new companies pop up, Impossible Foods, companies that are trying to basically replicate meat and fish in a way that's, not actually using those animals. But yeah, so that looks like a company that I'm interested in digging into, Vitasoy. I was digging through all of my kind of go-to resources for, where are the smart investors doing write-ups on companies like Vitasoy. Nothing in SumZero, nothing in VIC, nothing in MOI Global, nothing in Vintage Value Investing for the Q2 letters to shareholders, nothing on Twitter. So there's really not much out there, at least in the circles that I play in, on Vitasoy. So I'm going to have to do more digging. But one that popped up also was Africa Oil. Okay, I'm not personally interested in the oil industry, but Massive Capital has done quite a bit of work on Africa Oil. They've posted on SumZero, VIC, Manual of Ideas. They're kind of all over with this idea in Africa Oil. And back when I looked at it, I took a brief look. Based on the valuation that Massive Capital came up with, it looked like a potential 4x for Africa Oil. So those are 2 ideas that may be worth a look.
It looks like Africa Oil trades on the Toronto Stock Exchange as well.
Right. Yep, based in Toronto, but their exposure is in Africa. Kenya, Nigeria, South Africa.
Curious on Vitasoy. That's actually pretty big here in Australia. Is that a US product as well, or?
Yeah, I have seen Vitasoy. I think there's a bunch of different soy products here in the US. Vitasoy rings a bell, so I think I've seen it. I was surprised that it's such a small company, though.
I have not seen it. Like pretty much the only ones I see are Beyond Meat and Impossible Burger.
It's more like called. For soy milk, I think. Is that what you're referring to, Frank, for the Vitasoy, or is it for other products?
In Australia, that's like, I would think that's the biggest brand of soy milk here in Australia. I know like the McDonald's and franchise here in Australia uses Vitasoy.
Wow.
Really?
Yeah, it's pretty popular. I guess that might be part of the location here in Australia, I guess.
Right.
It gets here easier than other places.
Yeah, don't know how they do it with soybeans not having nipples, but that's a topic for another day.
Yeah, we'll get into that later.
I know for soy milk in the U.S., Silk is probably the biggest brand out there. I've never seen Vitasoy, though. Silk seems to have a lot of the alternative milks. Nipples or not.
Oat milk, almond milk. Yeah,
almond milk.
Karthik, I don't know when Funsmith bought Vitasoy, unfortunately, but I'm sure it wouldn't be that difficult to figure that out. Looking through past reports, they probably even highlighted when they first bought it.
It has dropped down pretty significantly recently. I think it's down about 40% or so.
Yep.
I gotta say, Brad, the Funsmith reports and meetings and things seem to be a great source for just like lots of good ideas.
I think so.
Look at that. Look how long that list was of a bunch of companies you probably never heard of, and like that's a good place to start.
And the thing I really like about Funsmith is they really seem to operate from first principles rather than following like what's trending. Kind kind of piggybacking on other people's ideas. A lot of original thoughts that I've kind of come across through Funsmith. So highly recommended.
And Terry Smith, his letters are worth reading as well. It's like a Buffett style write-up, I guess.
Right.
He really just breaks down a lot of different investing concepts really well.
Yep.
In the chat's loving it, Brad.
Rock on.
They thank you for your service.
Loveless is still here. That's great. Vitasoy. Yeah, let's all get some Vitasoy and read some Vitasoy annual reports together.
Yeah, take a sip, see if it tastes good. It doesn't taste good, then move
and
on.
Another anecdotal story on Vitasoy. It's pretty shit here in Australia.
So it is bad. It is bad.
My partner and I occasionally drink a bit of soy milk, and we stay away from it. So that's a little bit of scuttlebutt for you.
Good to know. Good
All
to
right,
know.
we'll move on then. It's not worth it. Frank is officially giving us his non-endorsement.
A2, on the other hand.
Yeah, A2 milk. Wow, let's talk about A2 milk. My goodness.
Now that one comes from a nipple. So now we're talking.
If you say A2 milk enough, will that help the algorithm? Our A2 milk content always seems to do well.
Well, I'd like to continue our conversation a little bit afterwards from the last one. Out of a show of hands in the live chat, who has drank, what was it, camel milk or
I missed this
buffalo milk? Camel milk or buffalo milk? I haven't had either.
We even spoke about deer milk. There's some
deer
some
milk.
trying to milk some deer out here.
Does buffalo milk mozzarella count? I know it's a very Italian thing.
No, it doesn't count, unfortunately.
That's as far as I've gone then.
Okay.
I do the plant-based stuff too, but no other nipples.
It's a great comment from Louise.
Yeah.
I'm not going to pull it up just in case the algorithm doesn't like it.
Might get demonetized.
Yeah.
Yeah.
We'll lose that $2 that of ad revenue.
Yeah, we've been raking it in.
Okay,
That's why we need the super chats. Super chats.
Buffalo milk, big in India. Camel milk too expensive. All right.
Is that
what
right?
were we talking about eating that time? Kangaroo
Do
burgers
or whatever it was.
Camel and all that. Or?
Is the equivalent of like a kangaroo burger in Down Under? Is that like crocodile or alligator meat here in the States? Would you say, Brad?
Nah, can't be that exotic.
So as the one who took us off the rails here, I feel compelled to try to get us back on the rails. Is that possible?
Yeah.
Should we go through some of the chat? Oh, Jack, are you going to present something or you just...
No, I just wanted to lead off with the emerging market fund stuff. So
cool.
Let's dive into some questions.
Let's dive into questions.
And here's a good kind of overarching one that's always on everyone's mind. Granted, we don't have the answer for everyone. What's the best brokerage firm to use for buying them? I know, Brad, you've been using Fidelity for a lot of your international stuff.
So question would be, where are you, Matt?
Yeah.
It varies obviously by location. In the U.S., I found Fidelity is pretty good. Interactive Brokers is decent as well. Those are two I can endorse personally.
Yeah, those are the two that I have open for internet or for non-US over-the-counter stuff.
Interactive Brokers is definitely one of the more common ones for, I guess, international investors. Here in Australia, if you're here, Commonwealth Bank it's expensive brokerage, but you do have access to a lot of different markets through that bank. So,
yeah, in New Zealand, you can do some of it through probably ASB would be the only bank really. We're getting pretty low on options at this point. Like I think TD Ameritrade just decided to close all their New Zealand accounts. So
nice.
Yeah, you can get into some of them through ASB, I think, but you want to be putting some pretty serious money into a position because the fees are through the roof. Outside of that, you'd probably be starting to look to interactive brokers. But yeah, talking to a couple other Kiwis, and actually Ben's just said it in the chat, the customer service is pretty horrific from what I've heard. I've never actually used it. So, but that's probably where I'd look if there was something that wasn't available on ASB and Hatch are the two brokers I use.
It seems like interactive brokers went for more of a quantity approach, just like as much access as possible at the expense of maybe not having as much individualized support, though.
Yep.
Yeah.
That's a gentle way to say it.
Right on. There it is.
Agreed.
Trade-off. Everything has a cost.
Jack, how many do we have watching live at the moment? I can't see that from my end.
We're in the 40s right now.
Okay, good.
A fairly pedestrian showing compared to our China content.
So as we scroll down the chat here, guys, if you have a burning question that you want us to hit up that super chat. Let's keep on plugging away, Jack.
Yeah, let's see here. Yeah, Brad, you're in your live stream mood right now because you've been pumping them out recently. It's like a live stream every other day.
Yeah, well, Frank in Ticker Time, he's giving me a run for my money over there.
Yeah, we're getting into the live stuff here. Tom, are you gonna adventure into more?
I think Jack might be done with live stuff after his experience with Hacker Tom.
Oh yeah, you got the fake Tom.
I forgot about that. Yeah,
You got the fake Tom trying to hit on you and everything.
Oh yeah. So yeah, that was it. Really threw me off because I don't know if it was my last stream or 2 streams ago, but pretty recently I was doing like a Q&A and real Tom was there and he asked some normal question, made some normal funny comments, and it was like, okay, great. And then towards the end, someone made like a fake account of Tom and immediately started like saying very obscene things. But I was like, is this Tom like being hacked? Like what's going on? But it was actually just a completely separate account that someone took the time to make and then try to bomb the stream.
Oh,
it's like,
man.
Thanks, guys.
Yeah, and my end of that story, I think it was like, must have been first thing Saturday morning, and I like always have a slow start to the morning, just have coffee and like lie in bed for a while. So I was doing that, commenting on Jack's stream. This is great entertainment to start the day. And then went and had a shower and then got out of the shower and had all these messages of like screenshots of things I was apparently saying. It's not a good look.
Yeah, it was very confusing just because like you had just said something, like you actually had said something and then minutes later this started happening. So it was really thrown off. Anyways, you got to be careful with live streams. They're we haven't had a problem, thankfully. It's very civil here. YouTube does a good job blocking any spam on, well, maybe it is. It doesn't block all spam, that's for sure. But at least in the chat, it's been pretty civil, which is great. Anyways, Tom, are you gonna get into any regular live stream content, or are you forever scarred as well?
No, I've just started the podcast channel. You're plug for that. So I'll probably spend a bit of time on that. A little bit of a preview. I'm recording an episode with Jason, Afternoon Investor, tomorrow. I think I saw him in the chat earlier, so that'll be fun.
Let's get him out here. Yeah, here he is.
There he is.
How do you do research on emerging market stocks? What is the value line of Brazil, India, etc.? How to do research? Well, I mean, we talked about Funsmith. That's a good source, but I mean,
Ticker is pretty good for stocks all over the world. It seems like.
Yeah,
I think that the ideal would be, I guess you can get quantitative data from Ticker, but the ideal, like you've kind of done, Brad, is find real people on the ground that can actually look into these businesses. That would be the perfect scenario. So there's not a simple just go here kind of answer for that. Some of that stuff,
right?
I think.
Because oftentimes language, especially, is such a huge barrier, at least for non-bilingual, trilingual, however many languages you might know. That can be a big barrier. So like, having extra resources outside of just company filings can be helpful for getting a start on even where to look. If there are any English resources that don't have a huge lag time or whatever language you speak, that can be super helpful. Obviously.
Or just do what Matt Peterson did. Find the best analyst in the country you want to tackle and partner with them. That's
give them a call.
Yeah, give them a call. Ring them up. Actually, Masood is very accessible on LinkedIn. We're direct connections now. So if any of you guys need a referral, let me know.
It's because you met him when you were in.
Exactly. He took me around. Yeah, I know a guy that
shook his hand. Like, you guys had lunch a few times. Like, you guys are friends now.
Turkish coffees and all sorts.
The story is growing.
What is it, the baths, massages?
The Turkish bath. Oh man, here we
go. Brad's gonna have to get us back on track again.
Yeah. Well, it's getting harder and harder, like herding cats.
I'm the inertia. I'm just pulling us off.
Yeah. What else do you guys see?
Let's see here.
What's Buffett's most successful emerging market investment?
I think he
what are all
has to at this point he has to avoid emerging markets just because of liquidity, I would say, to make a sizable bet. I don't think there's many emerging markets where he really could. Maybe some of the larger companies in a place like India, but
In Japan, they've got some holdings, right? Berkshire does.
I think
does Japan count it as emerging?
Right. It depends. Yeah, how you define it, I guess.
Yeah, he's made a few. I mean, BYD has been a home run. It was a small-ish bet in the grand scheme of Berkshire, but BYD's done very well. He used to have a holding in PetroChina, which I think this was probably 2005-ish, I would say. I think he got probably a double out of that, something like that. But he didn't decide to continue holding that. He sold out of PetroChina. So there are a couple.
I just remember
he definitely loves the US, though.
I just remember when Guy Spear and Monish visited Buffett's office, and they saw a Japan company handbook on his desk, and Monish was going through and earmarking different ideas because I guess Monish has one as well. So that was, I like that story.
Yeah, Japan's an interesting market. It's a place I like to look for ideas. I'm yet to invest there, but there was a question from Sandeep recently about Nintendo. But that I wouldn't call Japan an emerging market at all, but it is one of those interesting international markets that I think is worth looking at. They're pretty cheap, like emerging markets are, but that's more so from their huge crash in the late or early 90s even. So they've kind of traded cheap for a long time, and now the companies there tend to hoard cash just as a kind of safety mechanism. So that's one of the problems with Nintendo, actually, is that they're hoarding cash and don't allocate capital very well. Even though they have so much optionality, which is kind of the appeal. They have a super powerful IP. But until they're willing to kind of spend and really try and create some returns on investment with the capital they have available to them, then I'm kind of staying away from that one. It's right at the top of my watch list. Everything's kind of, well, it particularly is getting even cheaper again. So it's getting more appealing, but unless they maybe announce a longer term buyback, they just have been buying back shares, which is pretty good. But other than that, they've done nothing with capital for a long time. So yeah, there is appeal to Nintendo.
Yeah, if there was ever a place where management really mattered, it's probably somewhere like Japan, because you can get into these quote unquote like value traps if the cash is just kind of like or it's almost like turns into a mythical thing just sitting there, and doesn't really exist because it never gets distributed out.
Right. So it might as well be buried.
Yeah.
So I think in the 90s, the PE ratios in Japan got to like around 80 or 90, maybe even higher. In comparison to like 2000 in the Nasdaq got to around 50, was it? I think maybe not even quite that high. So
I think the S&P got to 50. The Nasdaq might have been higher.
Oh yeah, you're probably right.
I wonder for Japan, how much of that was it like a whole market thing, or were just a few crazy valuations?
I think it was the whole market, and a lot of it was driven by debt. It got pretty insane because like Japan was like it was kind of the hot country. It was just like they could do no wrong. So you had tons of money, lots of debt pulled out, and they're dealing with the consequences of that to this day. Because it's very hard to unwind all the leverage, and debt-driven growth is very dangerous and has long-term effects. That's all I'll say.
Yeah, I think the impact on the real estate market was even worse from what I've heard.
Probably, yeah.
So we got one from Roman Stees. How can we buy China or India via index? Probably, well, the first thought that came to mind for me around that is just look at what Bridgewater holds. They own a lot of index funds, and they're probably just going to be the lowest cost index funds.
That's a good rule of thumb.
Yeah.
Go to the person who buys everything and looks at literally everything, and
right.
That's a good place to start.
Yeah, and I don't think you have to. This might be obvious, so apologies if it's a no-brainer and you've already thought about this, but you don't have to go to outside countries to get exposure to them either. Like the US has an ETF for everything at this point, so if you want emerging markets, you can go there.
Yep.
There's also a lot of emerging market companies that trade on in the US as well, so there's also access that way.
Exchanges and
And big U.S. companies that have a lot of exposure to emerging markets because they sell a lot of
Super
product
Chat.
there, right? Super Chat,
Ah!
BA.
Okay. You're gonna need more than $5 for that.
Jack, be nice. Be nice to
Do
our
it for the
super
people,
chatters.
Jack.
Hey, I appreciate it, but he's demanding I take
Hey,
one for the
Jack,
team.
what if you just grow the stash? It would just
Yeah.
the
Well,
stash.
that's like
it's
what
a
I'm
small
lacking.
amount of real estate on your face.
That's what I'm lacking, so it'd look horrible.
You got 2 weeks to get mentally prepared for this phase of your life, Jack. And
Have I
then
been
we're into it.
exposed like that I'm not in it yet?
Here, I got an idea, Jack. Just buy like different fullness, like paste on mustaches. Every couple of days, you can put a new one on.
Jack,
I need to what go ahead, Tom.
what's the price? What's the super chat we need
Ooh.
to have Jack
What's
grow?
the
I
price?
know.
Like, how
I was
outrageous can I go?
I was talking to Frank offline about this. Like, how big a super chat do we need to shave the beard? And
Yeah,
the
it got
numbers
pretty
were getting
steep.
pretty outrageous.
Got pretty
yeah.
steep, pretty quick.
Yeah.
Well, wait, what's your that'll be my frame of reference. What were you guys going to be demanding?
I actually forget what I said, but I did say my fiance has never even seen me without a beard. So it's got to be high. I've got to pay a lot.
Yeah.
I might lose my fiance over this.
I remember there being quite a few zeros on the end of the number, whatever it was.
Frank doesn't have a chin.
So,
Hiding it this whole
after you
time.
get married, Frank, then we can revisit this conversation. Yep.
Is that how it works? You can do whatever you like after that.
That's how it works, Tom.
Okay.
Maybe I don't know about this year, but eventually I'll do something. But you got to realize I'm on a streak. Like we're talking years without missing a day of shaving. I'm very particular about this, so it would be something new for sure. And I don't know.
Also made to be broken, Jack. Come on.
Yeah, I don't
Do you guys
know.
know anything about Lebanon? Do they have a stock market? That's an interesting question from Matt Hansen.
Brad just reining it back in. Thank you for the super chat. In any event,
I would assume that would be a market to stay away from if they do have one, but that's speculation about some global issues there, I guess. But
There's a Beirut stock exchange. There you go.
But there you have it. I wonder how many stocks are on the Beirut Stock Exchange.
15, founded in
Wow.
1920.
So
Isn't
if you guys
Google
ever
just
want to
the
be an
greatest?
expert of an entire stock exchange, this might be one to focus on.
you could say that too. It'd be on your LinkedIn. Expert in whole stock market. Just don't say which one.
Yeah.
No CEO of every public company.
there was a pushback on Nintendo's kind of recently. Perush Sharma. Nintendo is a global play and should not be compared to other Japanese companies. I think that's not true. In the sense that their business model is worldwide and their revenues are worldwide, that's definitely a plus. But the management is very much Japanese and really have the same focus of hoarding cash like a lot of other Japanese companies. So I guess, yeah, it's a great thing that they're a worldwide company, but what management is doing is the most important thing. And it hasn't been great until maybe the last year or so. We're starting to see a bit of a shift, but unless that's kind of projected for a longer time period, I'd still be hesitant.
Like a Japanese ethos in terms of capital allocation, that kind of thing.
Yeah.
Fair.
Yeah, it seems to be like a claim to fame. I don't know if that's quite the right term, but to be able to say, you know, our company's been around for 300 years, and that's kind of like the one thing everyone cares about is just survive, and they've built it so much fat into the system that they can kind of go through everything.
Right.
Whenever I hear that, like, oh, we've been around since 1800 or whatever, it's like, it's such a different business at this point. I get that it's kind of cool that they can say that, but I don't know how much to value that into a lot of companies, because businesses are just so fragile. Even the best ones, like, they always have to be moving and innovating or getting better or something, at least 99% of the time, because it's just tough. So I don't know if you guys value like longevity, like extreme longevity. I'm not talking about like a decade. I'm talking about like multi-generational, where the company's definitely changed over a few times. And
Well, I know Terry Smith really values that.
Yeah, that's kind of what I was getting at. I
Yeah.
know you did that video about his presentation where like that's kind of a requirement. It's like old, longstanding companies. I guess it's a cultural sort of indication. Like this is ingrained in the business culture, this innovative attitude or whatever it is. I've never really been one to like, oh yes, I'm gonna value this this company's age into it. Do you guys have thoughts otherwise?
There's a lot to unpack there.
Not really ageist. It's more like age
age agnostic.
Yeah, agnostic.
We had a. Oh, sorry. What were you guys going to say?
I was just going to say after an investor, Brad, you compounding? Like,
what's up?
Hey, what's up, stock compounders?
Gotta love it, Brad. I feel like you've changed up the intros on the live streams. Like it's not the typical.
It's not the same. It's not the same.
Yeah. What do you say? And is it? Do you keep a separate?
I think I say the same thing. Hey guys, I have a suggestion though. Something that would be really fun for me, maybe terrifying for you guys. Doing one of these live streams where we actually show clips from like original video content, just for everyone to see just how far we've come.
Like our earliest ones, like our
early videos. That would be a hoot.
I only go back to January 2020, so nothing too extreme. But
that's pre-pandemic, Jack. A lot has changed.
I'm definitely different. Definitely different.
Mine's even newer than that. Mine weren't. I don't think mine are that bad. I haven't actually looked. They might be. I know Tom has a couple of classics. Walk through the park with the wind blowing.
Those are great. Those are great.
Those.
Yeah.
You've got a couple of classics too, Brad. Actually,
Brad's got some good
real estate.
Brad's got the most easily. Brad is like a different person.
It was your
I look
idea,
like a
Brad.
total hippie. I look like a total.
Brad is like the real estate guy.
Maybe I shouldn't have brought that up. Let's keep going with the
Brad,
live
do you
chat
have
here.
CrossFit videos after Data Investor?
On my private YouTube channel, I have CrossFit videos.
Okay.
There we go.
Can we watch
Some
those?
digging for the people to do.
Let's see. What's the next question here?
How much you bench? Brad doesn't like this.
Okay, we'll move on.
Yeah.
Jeez, Louise. I'm not moving on. Savage, Louise. Why would you want to torture us with our old content? I don't think it's that bad. It's just
Louise,
different.
Louise, we need more super chats, and then we'll go easy on you.
Let's try to get maybe one more question in.
Sure.
There was a good one on about Russian stocks. I don't know of any Russian stocks, but have you guys ever heard about the Lilu Russian oil investment? Was it oil?
I don't know if it was oil. I know it was in Russia.
The only Russian company I know off the top of my head is Lukoil, which I think is one of their large oil like conglomerates or something.
Gazprom.
Yeah,
I'm pretty sure it's a market full of energy and financials.
It seems like
kind of similar to the Australian market, surprisingly, but it's a cheap market. That's about all I really know.
Has it always been cheap?
Well,
I would assume it has been for a while. I don't know if they've ever had a good period or not.
Yeah, when you say always, like after 1989, maybe.
Right. I don't know anything about Russia.
I couldn't even name a Russian stock, to be honest.
No, Sven covers a few of them.
Yep, that's where I would go if I wanted to learn about Russia.
He has a good smattering, a good
I'm struggling to find
international survey.
There is a
Tom, did you cut out? Yeah. It looks like Tom's in deep thought.
Yeah, he's just really focused.
you guys.
All right, you're coming back. This is definitely on you, Tom. You're not moving. We can hear
your voice is back.
There you are.
He is.
All right. There was. Hi.
You're
back.
There's a speech that Lilu gave. There's a speech that Lilu gave about investing in Russia, and maybe it's not oil. I might be getting it confused with something else, but I believe this was one of his. Like investing on student loan money picks when he was at Columbia, and he was buying some sort of commodity. I'm pretty sure it was a commodity for like literally like 2 cents on the dollar. So
Yeah.
even though he was going into Russia, there was like crazy margin of safety, and I think he made quite a lot of money on that. But maybe we should pull that speech up and get some of the details at some point.
Yeah, I've always been
there-
fascinated by that one.
There was a question straight under that about process shares outstanding, Jack, if you wanted to
Ooh,
pull that one up. This is one that Karan and I went back and forth on
controversial. Yeah.
for a while.
Beef.
And after the investors, the one that asked it, he also said a lot of people kind of go back and forth about this and say different numbers.
I lost the comment. I lost my spot.
What does it say in ticker,
what was
Frank?
it?
Are
Was
you
that-
pulling that up?
I haven't yet, no. Off the top of my head, I think it's 1.6 billion. I don't know if my memory's off on that. I know Brad and I had the same opinion, but the problem is the cross holdings between the NASPA shares where it gets kind of confusing.
Right.
So the way I go about the valuation is I factor the valuation, the 49% cross holdings in NASPAs into my net asset value of the company, the NAV, whereas other people kind of take it out of the market cap of Process. So I don't think there's really a right or wrong way about doing it. I kind of just leave the shares outstanding as is. And then when I'm calculating the assets, I then start to factor it in. So there's a lot of disagreement between that. If Kram was here, we'd probably be arguing right now.
We got to
but
save
the number,
those guys. Come on.
but the number on top of my head, I think it's 1.6 billion.
So I sent
the
an email.
number in the annual report. The number in the annual report is what I use directly. But you can start to factor in the cross holdings if you'd like, and then that would drop it down slightly. But you've got to factor all that into your net asset value.
So I emailed Process Investor Relations like 3 weeks ago.
You met them for lunch, but
yeah, in Turkey. And they said, so they sent me a whole thing about how they calculated the net shares outstanding, but it's 1.477 billion shares outstanding according to them. But there's a lot of nuance in here as well. So
doesn't Process just have they literally have a net asset value webpage where it has all this info, don't they? Or is it more complicated than that?
Actually, I don't know if they do. I know, what's the company that owns Alibaba? I'm blanking at the moment. The Chinese company, there's SoftBank. I know they have that directly. I'm not sure if Process do.
Yeah, Process.
But
I'll share my screen. Hang on. They've got it.
The problem with that, though, is the valuation of a lot of these different private and public companies and kind of working out the intrinsic value, I guess, of some of the companies that they own. That goes for Tencent as well. Kind of working out what you think the value of that Tencent stake is actually worth rather than just the net asset value. And I don't know how they're valuing their private companies, which again is kind of hard to work out the actual value of those as well. So I kind of apply a discount to that when I'm personally coming up with my net asset value.
Okay. Yeah, that's fair. I'm not sure if you want to pull that up, what I just shared, Jack. So this is literally on the Process website. They have a net asset value page.
So I guess if you want to work out their shares outstanding that they're using, if you scroll up, Jack.
This is
got
Tom.
Oh yeah, they have it there. They have it there.
1.458.
there you go. Yeah, they've been
So-
buying back over the last couple of months too, so it's going down.
So I don't know the
So
number that
that's-
the annual report says, but I think it's higher than that, which means they must be factoring some of their cross-holding with the NASPA's shares. The other confusing thing that they do kind of strange is when they report their earnings per share, they use the larger number, not that 1.4, as far as I could tell. So, yeah, I'm not too sure. Regardless, however you look at it, you need to factor that into your net asset value as well, like what you think the cross-holding between NASPAs is worth and everything else.
Shall we wrap it up there? I have a special thing for you guys since we're talking about mustaches.
Yes.
So back in high school, I did a good amount of video projects, and I would put a lot of effort into them. So at one time, I was a news anchor in this video. And,
Do we get to see it?
Yes.
I'm not going to show you the video.
No.
But I'm going to show you
Oh,
a
come on.
screenshot from it because it's relevant. So
Don't build us up
I
like
played
that.
like 4 or 5 different people, like all with different names, and it was like clearly like I thought it was pretty funny. But anyways, here's me. Let's see, wrong button. So I taped.
Wow.
Yes.
I
That is
taped on
November legit right
the
there, Jack.
1860s chops to mustache look. Which I mean, if I could do that one day, my mustache is not nearly prominent enough, but.
I don't know if that's in your genes, Jack. I don't know if that's ever going to happen.
This was before I knew for sure. I was in high school, so I was like, there's still time, but it doesn't look like it's going to happen. So anyways, thought we'd wrap it up there.
Frank,
Yes.
I think you could probably shave one of those.
Oh, he totally could do that. Look at his stash. It's
yeah.
let's put Frank,
I had a
front and center. Look at that
Oh, look at
mustache.
it.
Look at that.
Oh, that's a thing of beauty right there.
Beauty. Yeah.
Frank,
had a couple classics actually.
have you ever put beads on any of those beautiful?
No, I haven't done
No beads. Okay.
I have had the proper French mo curled up in my days when I was younger. Just
I've
the
seen
mo.
some old photos of that. Yeah.
And the super chat was worth it. Yes, it was. There you go. I hope I provided enough value there.
That was great. I had a
anyways.
friend who once grew a full body mustache. Like the handlebars went all the way down.
No.
Yeah.
What?
He shaved his chest to like have the full body handlebars.
Oh, I see.
No, that is nightmares, Luis. That one is nightmares.
Yeah. Should we invite him on? I can ask him.
Nope.
Jesus.
Okay.
Alrighty. Well, that was a blast. Good talk. Merging markets, mustaches, many other things. Fantastic. And a couple super chats this time around. Those are always exciting. Anyways, if you guys got any value out of this video, if you liked it, definitely leave a like below since that helps us out a ton, and subscribe if you haven't already, since we put out a new video every single week around this time every single time. So you don't miss those. Be sure to hit the subscribe button and hit that bell notification as well, so you get the notification when we are live if you happen to be awake during that time, since I know there are many different time zones that come in to watch us, which is awesome. But anyways, thanks everyone, and until next time.